Good afternoon, everyone. My name is Paul Lustrito. Welcome to another Red Cloud webinar. I hope you're all keeping well. I'm the president of Red Cloud Securities and here to talk to you and introduce to you next company in our series of webinars. We're seeing a number of precious metal equities that have had positive share price performance over the last couple of weeks as a result of central banks around the globe pumping liquidity into the system and try to combat the negative impact of this pandemic that we're all going through. And one of the companies that's greatly benefited from this increase in the gold price is Vista Gold Corp. As the world's become a more risky place over the course of the last 10 years in the mining investment world, investors have been flocking back to first world nations such as Canada, Australia, and the United States. In keeping with that theme, we highlight Vista Gold as a company focused on a feasibility stage project in Australia that has nearly 6 million ounces in proven and probable reserves and a tremendous amount of regional gold exploration potential. With me, I have on the line Fred Earnest, the president and CEO of Vista Gold. So the format of the webinar is as follows. I'll be asking a poll question and posting it online for you to chime in and answer over the course of the presentation. Fred will provide an introduction to Vista Gold and a project overview, and then provide the reasons to invest in the story along with the corporate vision that he has. After the formal portion of the presentation, we'll be taking a question and answer session. And so please send your questions via the chat to get and we'll get to as many as we can. To start, some of the boring stuff here, we'll handle the disclosures. There are many forward-looking statements made on this call. I would direct the listeners to the cautionary notes contained within the corporate presentation located on the company's website. For Red Cloud, I would highlight that the webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or recommendation to buy or sell securities. And we note that this call does not consider the particular situation or needs of the individual investors. Participants should rely on their own investigations and seek their own professional advice before an investment. With regards to Red Cloud Securities proper and related to Vista Gold, in the last 12 months preceding this webinar, Red Cloud Securities has been retained under a services advisory agreement by the issuer. I have posted the poll question up on the chat room. So the poll question is if you were a shareholder of Vista Gold, would you rather A, hold the shares as a leverage proxy to the gold price going higher, hope that management sells the company outright, focus on additional exploration outside their main deposit, or lastly, find a joint venture partner to partner and advance the project to production? And the results of that poll will actually get posted at the end of the Q&A session. So with that now, I'd like to turn it over to Fred to update you on Vista Gold.
Paolo, thank you for the invitation. Everyone, thank you for taking time to join us this afternoon. It's a real pleasure to be here and to participate in this forum. I will be making some forward-looking statements. I think that you're all familiar with them. I will not take the time to read this to you. Let me just touch base first on Vista's corporate capital structure and organization. We trade on the NYSE American and the TSX under the symbol VGZ. We have just over 100 million shares issued and outstanding. We've been trading right around 71 cents US. At the end of the year, start of this year, we had $4.7 million in cash, another $3.1 million in working capital that's comprised of shares in Midas Gold Corp. Later this week, we will be holding our board meeting and annual shareholders meeting, and we'll be announcing first quarter results thereafter. Our largest shareholders, Gold, they've been a shareholder since 2008, participated in the financing in 2012, and have been steadily adding to their position since. Europac Gold Fund is another large shareholder. You see Lowe's Corp, and then Global Strategic Management and Vista Board and Management. Under analyst coverage, we have 3 independent analysts who cover us, when the last is paid research, and we're hopeful that we'll be adding another independent analyst providing coverage here in the coming month. So let me ask the question first of all, why Vista Gold? What is it about Vista Gold that makes this something that you should consider owning? Well, first of all, strong correlation to gold price. If you're looking for leverage to the gold price, Vista should be one of those stocks that's in your portfolio. Second, low risk. Our project, the Mount Todd project, which we're going to spend a fair amount of time talking about this morning, is advanced and de-risked. We've spent a considerable amount of effort on metallurgical testing and optimization. All of our major environmental permits are already approved, and we hope to have the last permit, which is the operating permit, approved in the coming months. Last of all, the project enjoys strong economics at the most recent study parameters, which were at $1,350 gold price and a foreign exchange rate of 70 cents. And today we find ourselves in an environment where those parameters, the current conditions, are far more favorable, and at today's prices, the project is even more compelling. Third, in the real estate business, I always talk about location, location, location. We think that Australia is one of the great places to be. Right now, they're enjoying tremendous benefits and from the rise in the gold price combined with their foreign exchange rate. We enjoy not just a project in the Northern Territory of Australia, a place that's mining friendly. It's a large project, poised to be the 5th largest project in Australia with lowest quartile costs, with easy access, which sets it apart inside the Australian mining space. Last of all, or not least of all, we also enjoy the social license being in place. Last of all, I would suggest that low potential dilution is another reason. This project is partner ready. We don't intend to undertake the debt and the dilution for standalone development. We don't think that that's in the best interest of our shareholders, and it's not our plan. Rather, we're positioning the project to be able to find a partner to leverage off of their capabilities as they leverage off of the work that we've done to advance the project in a mutually beneficial arrangement. I think these are the 4 key reasons why anyone should consider an investment in Vista Gold. So what is our strategy? It's simple. Continue to efficiently de-risk the project, communicate the inherent value of the Mount Todd project, and we're going to talk about how that value has changed over the course of the last months. And third, engage in discussions with the goal of reaching an agreement with a potential development partner to advance the project with minimal dilution to the Vista shareholder. So with that as an overview, let me just talk about some of the points that I mentioned as why Vista Gold. First of all, let's talk about leverage. You look at this chart, which starts on November 13th, 2018. That's the date when the gold price stopped moving sideways and started its upward trend. Since that point in time, and up through more or less the middle of February of this year, Vista has demonstrated considerably more leverage to the price of gold than many of our peers. Certainly, we've had our ups and our downs. The last 2 months, everybody's been down as markets have reacted to the COVID-19 pandemic. But in general terms, we respond more favorably and more quickly. We rise higher, more rapidly than many of our peers. If you're looking for leverage to the gold price outside of owning the metal, I think that this is a compelling chart. So let's talk about the Mount Todd project. The picture that you see, and first of all, let me city of Darwin, and about 10 kilometers east of the Stewart Highway. As far as accessibility, this project is one of the easier, potentially large projects to get to. About 3 hours drive from the airport in Darwin once one arrives by flight. In the picture that we're looking at, you see what the project looks like. This is a brownfield site. It was operated in the 1990s, first as a heap leach operation, then as a milling operation. As a result of this being a brownfield site, we enjoy tremendous infrastructure. We have paved roads all the way to the plant site. We have power lines, a natural gas pipeline. You see the tailings storage facility and a freshwater storage reservoir. All of these are key pieces of infrastructure which were constructed by previous owners and operators. The resources and the reserves for the project as reported today all lie below the Batman pit. That trend or mineralized zone stretches about 1.6 kilometers in length, both to the north and to the south of the pit, and continues at depth to over 600 meters. Now, talking about the infrastructure, I guess I should point out that while we're very grateful to have paved roads and some of the other things, the natural gas power line is perhaps one of the more important pieces of infrastructure that we have been favored with. And the reason is simple. Energy in the Northern Territory is expensive. Power from the grid costs about 31 cents a kilowatt hour. But by being able to design and build our own power plant as part of the capital and part of the design of the project, we estimate that we'll be able to generate power for between 8 and 9 cents a kilowatt hour. It's pretty obvious the value of the pipeline and our accessibility to natural gas and the impact that it has on the project. So let me just kind of give you a little bit of history. Last September, we published an updated preliminary feasibility study. We started in 2012 to complete a feasibility study, and we're nearing the completion of that process in 2013 when the gold price fell from $1,600 to $1,450. At that point in time, we made the decision to terminate any engineering that wasn't completed and to announce results of the study as a preliminary feasibility study. The only parts of the engineering that were not completed at that time were the piping, electrical, and instrumentation designs in the process plant. All other engineering studies had already been completed to feasibility study standards. And it was our intention to announce a result in the spring of 2013 and then immediately proceed to finish the rest of the engineering. Those of you familiar with history and the gold price know that in June of 2013, the gold price fell from $1,450 to $1,300, and we put the project on the shelf. And starting in 2016, we started doing a lot of engineering work, and especially looking at metallurgy and how to improve the recoveries of gold from the project. This has resulted in 2 subsequent preliminary feasibility study updates, the most recent one of which was announced in September of last year. The results are shown on this slide, and really what I'd like to draw your attention to is the chart at the bottom. This is a chart that shows the production versus cost for all of the Australian gold producers. And we've inserted the Mount Todd project showing its average cost for the first 5 years, along with average production over the first 5 years. From this, you notice, looking from left to right, that Mount Todd is positioned to be the 5th largest gold producer in the country. Second of all, if we look bottom to top, everything above or below the blue line, you notice that without having to count the balls, that Vista's Mount Todd project is in the lowest quartile cost producers in the country. Now, a little bit more about the project. People ask me, how is that possible? Given that we all know that the ore is hard at Mount Todd and that the grade is 0.84 grams per ton. Well, I think there's 3 reasons why we're able to achieve this cost structure. First of all is that this is a new project, and new projects get to take advantage of technology. The last big projects that were built in Australia were Boddington and Cadia, which were commissioned in 2009, 2010. The last decade has brought us a tremendous amount of technological advances, particularly in the area of ore sorting. And we have incorporated ore sorting. What it does for us is doesn't make or break the project, but it results in a 10% savings in that we're able to reduce the amount of run-of-mine rock that actually gets to the grinding circuit by 10%. That reduces our grinding, leaching, and tailings handling costs by 10%. Second of all is size. Large projects, especially large open pit projects, get to take advantage of economies of scale. We're able to move more tons per man shift than you're able to underground. That's an important factor for us in Australia, given our labor rates. Third is the fact that this is not a fly-in, fly-out operation. The traditional mining operation in Australia is built out in the middle of nowhere. The company flies its workforce in, houses them in a very nice camp, feeds them, and then sends them home. And a whole nother crew comes in to take their place. And so they have 4 crews to cover the 2 shifts per day and to have 2 crews on rest and 2 crews at work. By being a community-based project, and I should have pointed this out on the map, we're only 30 minutes north of the town of Catherine. Catherine is a regional commerce center, home to about 14,000 people. Pine Creek, north of us, is about 45 minutes away. We've worked with the local community leaders and designed the project to be a community-based project with the idea that all of our employees will live locally and commute to the mine site every day. This eliminates the need for airfare. It eliminates the need for having a camp and all of the associated costs. And it eliminates the need for a fourth crew. And just looking at mining costs alone, that allows us to reduce our costs by 15%. So these are some of the things that we've built into the project that have allowed us to achieve some of the comparative economics that we report. Now, to get into a little bit more of the details of the results of the most recent study, the things that changed: gold price had improved from January of 2018 a little bit. We increased the gold price in our analysis by $50. Foreign exchange rate had changed noticeably, dropped from 80 cents to 70 cents. As a result of our metallurgical testing programs, we reduced the grind size from 60 microns to 40 microns. And this resulted in a very significant improvement in recovery, where in 2013, we reported a recovery of 81.7%. We now estimate that the recovery for the project will be 91.9%. We did some comparative testing of two different types of fine grinding equipment, and we've selected FL Smith's VXP mills. Last of all, we undertook some analysis. We engaged a independent engineering firm to conduct a benchmarking study to ensure that our costs were in line with what had been experienced by others in capital costs, and also that our operating costs were in line. Furthermore, we conducted an in-house study to look at what have been the sources of capital cost overruns for mining projects in the last decade. We noticed two things. First of all, many projects struggle with controlling their infrastructure costs. Fortunately for us, that's not a very big deal because of the infrastructure that's already been constructed at site. So we moved on. The second thing, though, was a little startling to us. We as a mining industry are quite optimistic when it comes to production schedules. And so we went back and we talked to our engineers, and they insisted that we could build the Mount Todd process plant in 18 months. We turned to the engineers that were doing the benchmarking. And while they didn't disagree, they agreed with the caveat that it would be if everything goes well. Well, it's our experience that all things don't always go well in construction of facilities. And so we've added an extra 6 months, changing our construction period from 18 months to now 24 months. We also recognize that not allowing for an appropriate amount of time for commissioning and ramp up and getting up to commercial production is a critical factor in achieving the design capacity of a project in a timely manner. And so we added time there as well. So I'm not going to read the chart to you in the lower right-hand corner of the screen. I'll let you peruse those numbers at your leisure. But let me just talk about the waterfall chart on the right and talk about the impact that each of these changes had on the project last September. We started with the previous pre-feasibility study update having a net present value of $679 million. The change in the gold price, adding $50, added about $100 to NPV. Changing the foreign exchange rate to something closer to the current exchange rate added about another $150 million. The gold recovery, improving the gold recovery and being able to recover an additional 350,000 ounces from the same rock added over $200 million. And if I said thousands, I meant millions on the previous numbers. Added over 200 million to the NPV of the project. Now, extending the construction period has a cost. Our owners' costs go up. We have labor. We have people there longer. You see that as a negative impact on the project. Furthermore, as we grind to a finer size, there's certain things that operating costs go up. We see a modest increase in power. More importantly, as we increase the surface area of the particles by almost a factor of 2, our reagent consumption goes up. And you see that shows up as a negative impact on the project NPV. Now, what this tells us is that if we are in a $1,350 gold price environment, we probably wouldn't grind to 40 microns. We'd probably be content to stay at 60. However, we're not at 1350. And the bars on the right side of the chart just give you an idea of the significant impact that having a better gold price makes. When we talk about leverage, this is one of those places where the reason that we enjoy leverage to the gold price is this, that as the price of gold moves up, the economics of the project move up very, very quickly. In fact, at today's gold price and foreign exchange rate, the NPV of the project is over $1.6 billion with an IRR of 40%. And so you'll just appreciate that as the gold price improves, and if you believe that the gold price is going to continue to improve, this is something that you should be looking at very closely. I'm not going to spend a lot of time. I know that not everybody agrees with the gold price assumption or the foreign exchange rate, and they want to be able to tell what the project is, what the economics of the project are at their preferred numbers. These two charts allow you to do exactly that. And so I'll just leave that explanation as is. Now, when we talk about pure comparables, I think there's two different ways that you could look at this. Some people are interested in learning, how does Mount Todd stack up against other projects that I might be investing in? Another optic to look at it from is, how does Mount Todd stand up compared to other projects that a partner might be looking at participating in? I think either way, these are interesting charts, but from a potential partner's point of view, I'd like to just walk you through these three charts, starting in the lower left. When we look at life of mine average annual production, and obviously we've not included some of the super projects, the super deposits that are out there, but the third party that selected this data for us felt that these were appropriate peer groups for the kind of partner that we would be looking for. So when we look at life of mine average annual production at just over 400,000 ounces life of mine, you see that we're very competitive. We're at the bigger end of the scale. And certainly for someone looking to make a significant impact on their production, this is an important consideration. Moving over to the chart in the lower right-hand corner. When a partner looks at something, they've got to evaluate how much money they're going to spend and what's going to be the cost impact of that per ounce of gold produced. What you see here, the gold bar is the Mount Todd project, that while we're one of the larger producers in the peer group, on a capital intensity basis, dollars per ounce produced over the life of the project, we're actually in the lower half. Part of the reason for that is the infrastructure that we enjoy at Mount Todd. The fact that we don't have to build roads and power lines and pipeline and tailings impoundment facility and water management facilities. And so the use of our capital is actually very efficient. We don't discount the fact that $826 million, as the CapEx is estimated to be, is a large number. But on a per ounce basis, when you build a 50,000 ton per day plant and build a project that can produce 500,000 ounces of gold per year, you're going to spend money. And the important thing is, how efficiently is that money spent? And I think that this chart shows where things stack up. And last of all, draw your attention to the chart in the upper right-hand corner. This is proven and probable reserves. And certainly that's one thing that everybody looks at. They want to have an idea of, what's the life of this project going to be? How long can we expect to be there? Well, I'm going to show you in a moment that we have considerable exploration potential, but with what's known as proven and probable reserves today, we're actually in a very, very sound position. Now, only the 4 projects on the right of this chart are projects that are held by single asset companies like Vista Gold, and therefore would be available for a potential partner to consider. Now, the interesting thing about that is that, again, not only do we have large production capacity, but we also have long life to go with it. Now, from your perspective as a potential investor, I think that you'll find the light blue lines to be interesting. This is a metric that we as an industry used to talk a lot about 10, 12 years ago. It's simply the ounces of proven and probable reserves behind each share that's issued and outstanding. In other words, you can translate this to what's the value of the gold in the ground in terms of, my holding as a shareholder. Well, when we look at Orezone and Sabina's projects, they're at 0.01 ounces per share. That's about $17 of value in the ground as it sits today. The Midas project, or their Yellow Pine project, they're a little over 0.02. It's about $35, $36 of value in the ground. And then you see that light blue line for Vista goes up to 0.057. That's over $100 of value on the ground. This is another one of those things that gives us leverage in that there's plenty of value in the ground behind each share. We've not diluted our shareholders. We've been very cautious with our capital. We've raised money when we've needed to. We've funded a number of our activities over the course of the last 8 years through non-dilutive sources of financing. And we've been very mindful. And I think that's paying off for us today, in that when the price of gold goes up, we move more quickly. And part of it is the leverage because of the value, the amount of gold that we have in the ground per share. So, as I promised, talk briefly about exploration potential. All of the resources and reserves for the Mount Todd project are located inside that small box in the bottom part of the screen that's labeled the Mount Todd mining licenses. In addition to that, we have over 1,100 square kilometers of exploration licenses that are contiguous with the property. Now, we've invested over $100 million to date in the developing the Mount Todd project. Of that, less than $2 million has been spent on the exploration licenses. The simple fact is that we have been focused on and have been concentrating on developing a project with almost 10 million ounces of resources today. We felt that unless we made a major discovery, that there would be very little improvement in the value for our shareholders. And so we focus our expenditures and all of our activities on advancing the Mount Todd project, which is the Batman deposit. This is a tremendous exploration opportunity here. We control over half of the Pine Creek geosyncline. We're at the southeast end of the Pine Creek district, a gold producing district that has produced gold for over 100 years. Kirkland Lakes, Cosmos, and Union Reefs Mill are a little to the northwest of us. We've identified a number of gold occurrences. We've drill tested a couple of targets, the Wandy and Goldeneye targets. They require more drilling. We've not been fortunate enough to make what we would call a discovery in the first 3 or 4 holes. So you kind of get a sense that there's a tremendous land package. It's in the right address. We just simply haven't made the investment, and that investment will come. And at the right time, there will be a considerable amount of effort put into additional exploration work. So to kind of wind this up so we can get to Q&A, what are the key takeaways? I'm not going to read the list to you, but I would just exert that our Mount Todd project is an exceptional asset. It's in a great location. All of the environmental permits are in hand. It puts us in a position where we're well advanced. We've done a lot of work to de-risk the project technically, whether through metallurgical studies, the fact that almost all of our engineering, we still continue to have the piping, electrical, and instrumentation designs at preliminary feasibility study levels, but all of the other engineering, whether it's environmental or process design or mining or power plant or water treatment, all of the other engineering is at feasibility study standards. And so there's very little risk, very few surprises that I would expect as we go forward with advancing to a feasibility study. We talked about the economics of the project, at the study parameters from September of last year and what they are today. I think that we show exceptional leverage. Last of all, I'd like you to take away and remember that we're focused on value recognition. We're not in this so that Fred Ernest and his team can go out and borrow $400 million and then raise the rest in equity just so that we can build a mine and be able to say that we did it. And while we have that capability and we could build our team and accomplish that if that were the desired outcome, we don't think that that's in the best interest of our shareholders. We don't want to take away from them the leverage and the opportunity that they've invested in and that they have today. And for that reason, we're focused on finding a partner. We will continue to try and advance the project. COVID-19 has slowed down our efforts to find a partner. And but this will pass, and we will once again be able to get on the road, and we'll be able to get people into the Northern Territory to conduct site visits, and we will find a partner. And I believe that in this price environment that we're in, and I think that it will get better before it's all over, that this is a project that has tremendous opportunity to reward its shareholders. I'm going to just click on the next slide. I'm not going to read to you the bios of the management team, but if there's any questions, I'd be happy to answer them during the Q&A. So, Paolo, I think that wraps up the meat of the presentation. Why don't we take some questions?
Awesome. Can you hear me?
Absolutely.
Okay, so we've got a number of questions streaming in here already. I'll start with the first one, which is actually fairly early on in the presentation process. So I think you may have answered most of it on slide 9. But Bart was asking here, you mentioned you wanted to further de-risk the project. What steps have been taken to de-risk Mount Todd?
Yeah, so probably the biggest one that's remaining is getting the approval of our operating permit. We submitted in Australia, it's called the Mine Management Plan. We submitted that plan in November 2018. We are we think in the final stages. We just earlier this month held a 4-hour workshop with representatives of the Division of Mines and some of our consultants to answer specific questions. We're down to half a dozen topics, and we have subsequently retained some independent engineers to conduct independent analysis and review. We think that part of the reason for that request is the department doesn't have all the capabilities to assess certain things, and they're looking for somebody else. So the biggest thing we're doing is working to get that permit approved. And once we have that permit, we will be in a position to say that we have all of the major permits for the project.
Excellent. Okay, next question from Lincoln. What is the soonest that a JV could be concluded?
You know, that's a really interesting question given the environment that we find ourselves in globally. You know, honestly, we have CAs that have been signed with others that have actually successfully completed site visits prior to the pandemic. We've recently signed another confidentiality agreement. You know, if there was a will, the very soonest, I think that we could at the earliest have an agreement in place by the end of the summer. Realistically, I think that we're probably looking at something latter part of the year, just given the circumstances of the pandemic and travel restrictions.
Okay. Next question, follow up from Bart. When will Mount Todd be ready to build, buy off-the-shelf mine? What is still on your to-do list? And I think that's related back to your earlier answer where you're saying you just had the major permit left.
Yeah, getting the permits is the number one. Once we have the permits, and let's assuming that, you know, let's just use a start date as, you know, from the point that we have a partner. You know, I would expect that we're looking at something on the order of 9 to 12 months of engineering and design. Construction is estimated now to be 24 months. We think that it could be completed prior to that. Commissioning and ramp up is another 6 months. So when you add all that together, we're looking at somewhere in the range of 3 to 3.5 years to be at design capacity.
Okay. Another question from Bart. Limited share count is very impressive for an explorer. The current, what's the current cash? How many Midas shares do you have? And how long will they allow you to run without tapping the capital markets?
Yeah, that's a great question. So at the end of the year, we had 4.7 million in cash. Obviously, we've gone through part of that. Last November, we announced that we had reached an agreement with a company called New Santera to allow them to repurchase a royalty that we have on a project that we used to be the owners of in Indonesia. They will make the first payment on that. We're expecting $2.4 million the end of the first week of May. So the end of next week, we're expecting an infusion of $2.4 million. We own somewhere in the range of 5.6, 5.8 million shares of Midas shares at the end of the quarter. Those are free trading to us. And with regards to, when will we go to the markets again? We don't have any immediate plans. Certainly, we're noticing that the purse strings of investors are starting to loosen up a little bit. We raised money in 2012. We raised money again in 2016. We've succeeded in funding our activities largely through non-dilutive sources of financing, selling assets, monetizing certain projects, etc. We still own a mill that we purchased for a project in Mexico in 2008. That's on the market. We're hopeful that as the metal price increases, that there will be a couple of projects that might kick off that might make use of that. It's on the market. It's for sale. Our asking price is $10 million. We would negotiate and take cash for a value less than that if it was lump sum. So with the 2.4 million, we'll have cash for roughly 12 months. But we like to operate with a bit more cash in the bank than that. And so as we'll be watching and monitoring the markets, and don't have a specific date, don't have any immediate plans for raising money. But I think that a reasonable person would look at it and say that it's been quite a while since Vista raised money. They're likely to go out and do it sometime in the next 12 months.
Okay. The questions are coming in here fast and furious. When would you expect a major to come out and write out and buy the Mount Todd asset? I guess they're talking about, if this gold price continues to do what it's been doing, that you would get an outright bid. It's hard for you to answer that question, but
that's a great question. I think the fundamental question behind that is, would we consider selling the project outright instead of just insisting that we want to be partners? And the simple answer is, if there's value recognition for our shareholders, absolutely. Are we interested in an M&A style, transaction for the project? That Vista gets taken out? Absolutely not. And we've got a block of shareholders. It's about 35% of the shares of Vista that will not go along with that kind of a takeover. Not without fair value being recognized. So, would we sell the project outright to a senior producer, and rather than being their partner? Yeah, absolutely. At the right price, we'll do what's right for shareholders.
Okay. Vista can continue to explore new assets or projects. Would you consider looking at the kind of regional exploration?
We've continually got our ear to the ground, and our exploration manager at Mount Todd is probably better versed and better learned with regards to gold deposits in the Northern Territory than anyone else. There's very few opportunities like Mount Todd that exist. We've looked at a few things. We've contemplated staking new ground. We've looked at some acquisitions. Many of the projects, many of the opportunities in the northern part of the Northern Territory. The Northern Territory is a big place. Tend to be smaller, narrower, underground. Things like what Kirkland has at Cosmos that require considerable effort to do the development work, and it's not a lot of tons, but it tends to be higher grade. We're always open. We're always looking. We haven't found something that we think fits yet.
Okay. Last question from on the line, and then I've got a few of myself. In reference to slide 11, Sabina and Orezone have less gold reserves but have larger market caps. Why do you believe this is the case?
That's one of those things that perplexes me. But I think it's simply that the total capex of the project is probably less. Their ratio, the relative ratio between their capex and their market cap is more favorable. And so shareholders look at it as less of an obstacle to the ultimate construction of the project. I think that one of the things that suppresses our value is the fact that our project capex compared to our market cap is quite a huge disparity. And because of that, there's the expectation that there's going to be dilution. And that brings me back to the message that we presented at the very start of the presentation. You heard it a couple of times during the presentation. We don't think that that's in the best interest of our shareholders. It's not our plan. That's why we're seeking to find a partner and to move the project forward. I think another reason is that there's many people that remember Mount Todd. And Mount Todd had a bit of a checkered past. We acquired it in 2006 out of bankruptcy. We were completely aware of what had happened. It's part of the reason that we've spent $100 million to get the project where it is today. If this were a grassroots project, a company might have only spent half of that. But there's been many things where we've had to go above and beyond the norm just to satisfy our own need to be able to demonstrate that the issues have been resolved.
Okay, we've had one more question come in on the line, and again, friendly reminder, if you haven't chimed in on the poll question, please do so. The data that I'm seeing here looks very interesting, so I think people would be interested in that at the end of the Q&A session. This question from Victor: what is the overall recovery of your gold through your process?
Yeah, it's 91.9%, and that's net of solution losses.
Okay.
So some very significant improvements in the project over the last 7 years.
Okay, so we'll go into the questions that I've prepared ahead of time. Can you provide us with an update on your activities to seek a strategic partner and explain what a transaction might look like?
Yeah, like I alluded to, the COVID-19 pandemic has slowed those efforts. Candidly, I'd expected to have been on the road the first week of February, and I ended up canceling almost 80,000 miles worth of airline reservations that was going to be part of a rather extensive pre-marketing effort to tell the Mount Todd story and gauge level of interest among a wide group of partners. Now, what would that partner look like? What would the transaction look like? I think that there's potential partners fall into one of two buckets. One is obviously senior producers or large mid-tier producers, somebody who would truly benefit from a project that would be able to generate, over or just under 500,000 ounces of gold per year for a 5-year period. That's obviously one bucket, and in that bucket, the transaction is pretty simple. I mean, it gives them the opportunity to leverage off of all the work that we've done over a period of time to advance the project, the engineering design, the metallurgy, and at the same time get the permits. It gives us the opportunity to leverage off of their development experience and the team that they would bring to the project. The other bucket is obviously the strategic financial partners who don't have operating experience, don't want to be the builders of the project or the operator, but want to have the exposure to the financial gain, and they're looking at it from a gold play perspective. And in that case, we would build the team. We would leverage off of their financial strength. They would leverage off of our ability as miners to be able to manage the construction process and then operate the facility. So ultimately, we're looking at a transaction that would keep us as close to 50-50 as possible, realizing that more likely we're going to end up as the 40% partner in a 60-40 deal, and we'll be the junior partner, especially if it's with a senior producer. We know our place in the food chain.
Okay, next question. What sets Mount Todd apart, and why should it be an attractive partnering opportunity for another company? You kind of alluded to that just now.
Yeah, just really quickly, I mean, size, advanced stage, whether you're thinking permitting, engineering, design, met testing, the fact that it's low cost, it's near term, permits are in hand, all of those things set us apart from others with regards to, being a potential partner. And then add on top of that, jurisdiction, certain operating considerations. We're not at 4,000 meters in the Andes, and we're not someplace in northern Canada where we have snow and ice for 5 months a year.
Compared to some of your peers, do you want to touch on why Vista enjoys the better leverage to the gold price?
Yeah, I think there's several reasons. I think one is just the asset itself. This is it's an advanced stage project. I mean, it hurts us with regards to our total capex, our total market cap, but I think it really helps us with regards to the leverage that we enjoy, and that people realize that as the gold price moves up, Mount Todd only gets better. Second of all, I would say, project economics, being in the lowest quartile producers in Australia, and Australia is a great place to be operating a gold mine right now, is another advantage. I think that the chart that we showed with regards to the ounces of gold per share issued and outstanding is another reason why we enjoy the leverage that we do, and that there's really true value in the ground that's there to be unlocked behind each share.
Okay. You touched on only waiting for one more permit, but you didn't really touch on your cost. Your costs are very low compared to other projects. First 5 years, cash costs are $575 an ounce, and all-in sustaining costs is less than $700 an ounce. Do you want to touch on why that is the case?
Yeah, sure. It's we all know and understand the fact that this is a hard ore body. And most people immediately jump to the conclusion that that means that we're going to have very, very high costs. Second of all, people look at the grade and they say, gee, it's sub-gram, Fred, Again, that just got to mean that your costs are going to be high. Well, the fact of the matter is that we still refer to our industry as the hard rock mining industry, and we do have the technology, we have the equipment to be able to efficiently mine and process hard rock. It's all a matter of selecting the right equipment. And I think I alluded to the fact that we've selected larger equipment so that we can be more efficient. And we think that high pressure grinding rolls give us a significant advantage in that. The other reasons, like I alluded to at the start, compared to our Australian peers, this is not a fly in, fly out job. This is a community-based project with like a mine in Northern Canada or Nevada. There's certain distinction that are distinct advantages that we receive from that, or sorting. Technology. The fact that we're able to get rid of 10% of the rock before it gets to the grinding circuit is huge. The grinding part of the plant is the most expensive unit operation in the process plant, and when there's 10% less material that you have to deal with, there's a tremendous opportunity there. So I think all of these things rolled together, Paolo, give us the cost structure that we have and give us the advantage that we have.
Okay, I'm going to just ask one more question because we're creeping up on the 1 hour mark. Do you want to talk about kind of the news flow that investors should expect over the next kind of 3 to 6 months?
Yeah, absolutely. Most immediately, financial results will be out first part of next week. Right behind that, the following week, we expect to have news announcing the receipt of the $2.4 million coming in from the first installment on the buyout of the royalty on the Awak Moss project. Looking down the track a little bit farther, sometime later this summer, we expect to be in a position to announce that we've received the approval of the mine operating permit. And then tag on top of that, the conditions depending, some news with regards to our efforts to find a partner. I think that those are the key things that somebody should be watching for.
Excellent. Okay, so the end of the Q&A session here, I promised everyone I was going to give the results of the poll. So again, a quick reminder: if you were a shareholder of Vista Gold, would you rather A, hold shares as a leverage proxy to the gold price? 25% of respondents were in favor of that. B, hope that management sells the company outright. 25% of the respondents are there. C, focus on additional exploration outside of the main deposit. I was surprised by this. There's only 12% of respondents. And the balance, find a joint venture partner to advance the project to production. 37% in favor of that strategy. So that's the overwhelming winner of the 4 categories. So, Fred, thank you so much. Really appreciate you taking an hour of your time to go through talking about Vista Gold and Mount Todd specifically. And we really appreciate it.
Paolo, thank you so much for having us. It's been a pleasure. As always, if anybody has any additional questions, would like to reach out to the management team, please feel free to reach out to me or Pam Solly, our Vice President of Investor Relations. we'll be happy to spend time with you. And if we need to get technical people on the phone with you, be delighted to do that as well. Thanks, everyone.
Excellent. Thanks, Fred.